Die Emerging Markets haben mit über 12% positiver Wertentwicklung in diesem Jahr einen fulminanten Start an den Tag gelegt. Vor allem Asien, zumal dort die Corona-Krise deutlich besser gemanagt wird, konnte bisher überproportional zulegen. Ein Trend, der vor dem Hintergrund, dass Asien und zuvor das China eine immer größere Bedeutung im globalen Kontext gewinnen, langfristig anhalten sollte. Hallo und herzlich willkommen bei Fonds im Fokus und dem Thema Emerging Leaders für die nächste Dekade. Zugeschaltet dazu aus Singapur ist uns Vishal Gupta. Herr Gupta ist seit 2014 bei Morgan Stanley. Er ist Portfoliomanager der Emerging Markets Leaders Strategie im Global Emerging Market Team. Welcome, Mr. Gupta.
Thank you. Thank you for having me here.
Das Interview führt Jan Richter, Senior Analyst bei FondsConsult Research, den ich herzlich hier im Studio in München begrüßen darf.
Hallo, Herr Schmidt.
Hiermit darf ich an Sie übergeben. Ich wünsche Ihnen ein angeregtes Gespräch. Bitte sehr. Please, Mr. Gupta.
Thank you, Mr. Schmidt, for your kind introduction and a warm welcome to Vishal Gupta, who's joining us from Singapore. Hello. As we are talking about the Emerging Markets Leader Strategy, what's the USP of the Leader Strategy and how does it differ from other strategies that are managed within Morgan Stanley Investment Management?
Emerging Markets Leader Strategy, it's the way it functions is it is looking for structural growth opportunities in emerging markets. And we are looking for companies that will be the beneficiaries of that growth. And it's a dynamic portfolio, benchmark agnostic portfolio. Now, we are focused on large continental-sized markets, namely Greater China, India, Southeast Asia, and Brazil. And the reason is that these are the places where you can really build scalable businesses. And these are the places where you have a variety of sectors to choose from. And there are a lot of entrepreneurs in these geographies. And our view is that over the next 10 years, a lot of new business models will be created. And these markets with large populations present the best opportunity for investing in emerging markets.
And within your investment process, you use 3 steps. And the first step is concentrated on looking for a thematic growth opportunity. So how do you do this and what are the current themes in the portfolio?
So what we are looking for is structural growth, which will last over the next 7 to 10 years. And once we have identified a theme, we will look for the companies and businesses that will be the beneficiaries of the tailwinds of that growth. So just to give you an example, so on-demand delivery is one of the themes in the portfolio, which essentially means that the penetration of the food that is ordered from restaurants will go up. Now, the penetration in most of the emerging markets for food delivery is still low to mid-single digit. And our view is that over a period of time, this penetration should converge to the penetration of other e-commerce categories, which is anywhere between 30 to 40%. So once we have identified this theme, we look for companies that will be beneficiaries of this growth. And in China, we own one of the leading food delivery companies. And we also own one of the leading food delivery companies in Middle East and Korea.
And your focus is on high quality companies. So as every manager is looking for high quality companies, how do you define high quality? What does it mean for you?
Yeah, for us, high quality, the definition has 2 pillars. Any company, for it to be investable for us, needs to have return on invested capital greater than 15% and a compounded earnings growth over the next 3 to 5 years of at least 15%.
And most of the time, high quality companies also have quite a high price. So what do you do for not overpaying for those kind of companies?
So when we identify a theme and when we identify a company, what we do is we forecast what the company would look like in 3 to 5 years from now, and whether the company, what kind of market share that they will achieve, what kind of top line and margins that they can achieve at a certain scale, and what is the kind of multiples that those businesses will trade at. Now, And we try to work backwards that what is the price we should be willing to pay today to get a double-digit compounding. Now, if the businesses are available at those prices, we initiate a position. But if the businesses are not available, we'll wait for the right entry price. And normally, given emerging markets have volatility, more often than not, we'll get an opportunity to build a position in the great business.
Nowadays, we also have to talk about ESG. So how and if ESG is incorporated into your investment process, and has it been part of your process for more than 5 years, or have you added it just recently?
So ESG has been an integral part of our process since 2016, and it's also part of our prospectus. So there are two parts to it. One is exclusions, that we won't invest in tobacco, coal, defense, and ammunition. The other part is that it's fully integrated into the process because the kind of risk that this portfolio is exposed to. So if any of those risks materialize, especially on E, S, and G front, the impairment of the value can be permanent. Since it's a concentrated portfolio, we cannot afford to take that risk. So our philosophy has 5 parts to it. So we call it ABCD framework. So one is we start with advising the companies to strengthen the ESG footprint. B is best practices that we have learned across industries and companies to share with our portfolio and potential portfolio companies. C is to connect with the companies very often as we connect on business and continue to review the progress. D is dialogue. It's not one way. Our view is that some of the portfolio companies, they are much ahead in terms of their ESG philosophy, and it has to be a dialogue where we also learn from them and can use those insights into other portfolio companies. And then the last is E is encourage these companies to formulate long-term ESG strategies and have goalposts which can be tracked over a period of time.
So you mentioned the dialogue with the portfolio companies. Can you give us a recent example for some company engagement?
I could give you 2 examples. So recently we had ESG engagement with one of our portfolio companies, which is a fintech disruptor in Brazil. The core theme that we wanted to discuss on ESG was data privacy and cybersecurity. Given the nature of their business, that is the biggest theme, that is the biggest risk that business is exposed to if you look at the ESG front. Now, the discussion was very fruitful, and the management has been taking a lot of steps on that front, but there hasn't been much disclosure on that front. So management was very responsive, and what we wanted from them was how much spending has been going on that initiative, and what are the kind of risks that the systems have been exposed to over the last 3 to 5 years. Now they're coming up with a maiden ESG report sometime in the middle of the year, and they have promised to crystallize what has been done and what they want to achieve over the next 3 years. Another example I can give is a sportswear manufacturer in China, and that's a business which has a lot of relevant ESG issues. So whether it's energy usage, waste management, supply chain, how the workers are treated in the supply chain, and it's a long supply chain. Now, again, that company has been working on an ESG plan and on their vision for last 12 months. And what they are doing is they are in the process of setting up a 5-year vision on each of these metrics, which they will be disclosing very soon. And the company's progress on each of those metrics becomes trackable, and it's an additional variable for us to see how the company is progressing in terms of achieving its goals on ESG front.
Now let's talk about the team and the people behind the fund and its success. So how the team is structured and who is the final decision maker?
So I am the portfolio manager for Emerging Markets Leader Strategy, and I am the final decision maker. So we have a dedicated analyst for the EM Leaders portfolio. Apart from that, in our emerging markets team, we have a 20 plus member team, and we have country dedicated and sector dedicated specialists. So in the process of building the portfolio, I take help from all those country dedicated analysts. And the way it works is, if I have an idea where I need their help for due diligence, I will pass on the idea and we'll do the due diligence together. Sometimes it happens that the country specialists, they look at an idea which I have never looked at, or my analyst has never looked at. They will highlight to us that this is a kind of idea which will fit into our long-term philosophy and the kind of quality metrics we are looking at. And then we'll again work together on the idea and see if it can fit into the portfolio. So we have quite a depth in the team, both in terms of sector and the regional specialization.
You have been involved into this fund since inception, or when did you start managing this fund?
Yeah, I joined the fund back in 2014, and I became a co-portfolio manager in November of 2015. And the lead portfolio manager retired in end of 2019, though that decision was made in 2018. And since then, I'm the lead portfolio manager for the fund.
And is there some interaction with other teams within Morgan Stanley that are also managing global and developing market strategies?
So the way Morgan Stanley works is it's like a platform. So each of these teams are like boutiques, and we always meet those teams in other company meetings. So, and that's where we have conversation and we exchange our notes. But otherwise, these teams, they work like boutiques.
So now let's talk about the portfolio. With 20 to 40 holding, it's quite concentrated. So what are its biggest active bets at the moment?
So the portfolio at the moment, some of our biggest active bets are in on-demand delivery, next generation ecosystems, which is a combination of e-commerce and gaming and payments. So if you look at our top 5 holdings, the largest holding is C, which is the dominant e-commerce player in Southeast Asia. It's also a dominant gaming company in this part of the world. Then we have exposure in Meituan, which is the dominant food delivery company in China, and Mercado Libre and Tencent are the other position which are in the top 5.
And how does this leaders portfolio differ from the core emerging markets portfolio that is also managed by your team?
Yeah, so our team manages core emerging market portfolios, some of the regional portfolios like EMEA and LATAM, and some country-specific portfolios like India and China dedicated portfolios. And then we have emerging leader strategy. Now, the difference is that this is a concentrated portfolio, benchmark agnostic. We don't invest in companies where earning predictability is not there. So you won't see emerging leaders investing in cyclicals, energy, materials. While the core emerging market portfolio has both bottom-up and top-down elements to it. So they will be investing in almost all the countries and across sectors. So the way core portfolio run is they'll have underweights and overweights on each of the sectors and countries, while emerging leaders is very focused on structural growth opportunities, and you won't see us investing in smaller countries unless there is really exciting opportunities, which is large, liquid, and scalable.
Okay, so you don't have any constraints according to the benchmark on a country or sector level?
No, we don't have constraints on that front, but we do have risk control. So in terms of the way portfolio is structured, you will see that the portfolio has 10 to 12 themes at any point in time, and the portfolio is well diversified across 4 geographies. So if one geography, let's say China, stops functioning, the portfolio doesn't stop working, or 2 or 3 themes are not working, the portfolio doesn't stop working. So it's fairly distributed. So in 2020, first half, China did very well, while India and Brazil didn't do well because they were under lockdowns. The portfolio still did fine. While in second half, India, Brazil, and Southeast Asia caught up, while China was consolidating, the portfolio still did fine. So we ensure that we don't have too much presence in one country, which can distort the portfolio. So there is a fair amount of risk control both on the thematic and the country exposure front.
And has there been any significant change in the structure of the portfolio during the last 12 months, during the COVID pandemic and now the end of the pandemic?
So what happened was when the pandemic struck, what we did, some of the names went out of the portfolio because some of the businesses like travel exposed businesses, we took a call that their business has been impaired to an extent and it will take a long recovery. And we used that capital into better ideas. Also, some of our ideas, some of the companies that we own, they went into the pandemic with large inventory. And our view was that it will take much longer to come out of the crisis. And we used that capital to consolidate the portfolio and rotate the capital into better ideas. But in terms of themes and exposure, there hasn't been any big change. It's pretty much like most of the things that we own, we still own them and they continue to compound and they still have a long runway of growth ahead of them.
And you already mentioned your biggest holding. So this company, at least on paper, is not even based in an emerging country. So how does it fit into this structure?
So emerging leaders can also invest in companies which are not listed in emerging markets, but most of their business is in emerging markets. So our threshold is that any company where 35% or more of revenue or profit is coming from emerging markets is investable for us. And the reason for this is that in some of the sectors and some of the growth thematics, it's a global MNC player or a company listed outside emerging markets, which is the dominant player. So our view is that by restricting ourselves to just the place of listing or being an index constituent, we can miss out on a lot of growth opportunities because there may not be a national champion who can take the benefit of that growth. So Seat, though it's listed in US and it's a Singapore registered company, but it's essentially the business is Indonesia, Vietnam, Philippines, Thailand, Taiwan. The gaming business is also in India and Brazil. So it's for all practical purposes, emerging market company.
Okay. And according to the fact sheet, you also have more than 6% exposure in Germany. So maybe that's something interesting to our listeners here. Which company is it?
Yeah, we own two companies which are listed in Germany, but they are essentially emerging market companies. We own Delivery Hero and Global Fashion Group. Now, Delivery Hero is one of the largest on-demand delivery companies. Their largest market is Korea. And Korea, Middle East, Eastern Europe, and LATAM together is about 90% of their business. So it's essentially an emerging market company. As I mentioned earlier, food delivery penetration is still in mid to high single digits in different emerging markets. And Delivery Hero is the dominant player in 40 of the 44 markets where they are present. And our view is also that the digitalization of convenience stores will happen on food delivery networks. And Delivery Hero is ideally positioned for this. The other company that we own is Global Fashion Group. Now, this is a dominant online fashion retailer in Southeast Asia, Eastern Europe, LATAM, and they also have a property in Australia. And 90% of their revenue comes from emerging markets. Again, in this category, we are in very early days of penetration. So this is a mini Zalando.
If one looks at your fund and its track record, it's obvious that 2020 was very exceptional for the fund on a relative and absolute basis. So was it a broad-based performance attribution, or was it just some COVID winner stock?
Yeah, so if we analyze the performance, the performance, such a strong performance came because a lot of things in the portfolio did well. And it's not only the COVID winners, but also companies which are dominant in fintech or financials, where business suffered in the first half of the year because of the lockdowns. Those companies recovered very strongly. So the way we invest is that we own the dominant companies in the business, and most of these companies went into the crisis and emerged stronger. So some of these companies, the kind of execution that they achieved in 2020, I think they surprised themselves. So it was very broad-based across thematics, across geography. Each of the countries, whether it's India, China, Taiwan, Brazil, everything contributed to the performance.
So you are optimistic that the portfolio also can outperform in a post-COVID environment because it had so broad-based and the structural themes are still intact.
Yeah. So the question that comes is that after this strong performance, what happens? So if you look at our businesses that we own, these are dominant businesses and they had a great run. And some of these businesses, they do look expensive if you take a 6 to 12-month view. But if you take a slightly longer term 3-year view, these are still some of the best businesses to own in emerging markets. Their growth, because of the base effect in 2020, will look lower in 2021. But these are still best-in-class growth businesses across markets. So I expect a period of consolidation in the portfolio and then gradual performance built up. Now, in a world which should recover fast enough for the good of mankind, there can be a period where value outperforms, and that period the stock portfolio may not do that well. But if you take a 3-year view, this portfolio, as long as the managements continue to execute and they continue to deliver, portfolio should compound.
So even with the good performance in 2020 and the big gains that we have seen this year, you are still comfortable that now is still a good entry point into your fund, at least with a 3 to 5 year investment horizon.
Yeah, I believe so. So it's timing. The entry is not something that I do very well, and that's not an area of my expertise. But our view is that in next 10 years, you will see a lot of businesses getting scaled up in emerging markets. Some of the emerging markets are far behind in terms of the innovation. China is far ahead, but again, there are areas in China like the B2B enterprise spending, which will scale up, and there'll be a lot of market cap creation on that side. And similarly, you will see scaling up of businesses in India and Southeast Asia and Brazil. So there will be a lot of opportunities. There are a lot of opportunities to invest, and I think this is probably the best period to invest in emerging markets if you take a 5 to 10 year view.
Thank you, Vishal, for your insights into your fund, and good evening to Singapore.
Thank you. Thanks a lot.